So quite the eventful end to last week. We saw a major squeeze on Friday, and not only did we see a large squeeze on Friday, but over the weekend there was a lot of news in regards to what's happening in the Middle East. So that is setting up for a lot of volatility this week, and there's a couple things that I do want to go over here initially in the video. The first thing to note is last week the weekly candle did pick up back above this blue trend line. So this is the blue trend line that goes back to the October lows, connects to the March lows, and is the one that we did go slightly under last week, but the weekly close did close back above. So we've yet to have weekly confirmation below this trend line, which is the first key thing. The second key thing is that with this volatility that I'm expecting this week, and based on the futures open so far, it seems that we're going to get some form of a pullback back under this trend line. At least that's the likely scenario right now, which would mean there's a potential inverse head and shoulders setup. Now, an inverse head and shoulders pattern is certainly very bullish. You of course need to make sure that the shoulder line holds. In this case, the shoulder line would be around 422 mid to around 424 at the high end. So right in between this range, you need to make sure that that holds. Otherwise, if it is invalidated, you would see a lot more downside. Like we're talking back to around 415 or so on SPY if this was invalidated, because whenever you have a bullish pattern and it's invalidated, there is an excess amount of weakness to the opposite side. But as of now, this is a potential setup for this week. I would like to see this shoulder line hold, especially going into Wednesday. That would certainly be bullish for a potential reversal. It also reminds me of a similar pattern to what we saw back in October of 2021. If you remember this, we did have an inverse head and shoulders pattern, a bit of a better one, but here we had the left shoulder, the head, and the right shoulder, and what happened after just a straight melt up back to all-time highs. I'm not saying this is necessarily going to be the case, but it's certainly something to watch for in terms of the pattern alone. It doesn't mean that we have to melt up like we saw back here. That's not my base case, but this just goes to show how powerful inverse head and shoulders can be. And as long as the shoulder line is able to hold on this, we can certainly see upside from here. But again, we do need to hold 422 mid at the very low end of this shoulder line. Otherwise, we're going to see new lows afterwards. So in terms of risk reward, this is an amazing trade. If we can get down to around 423, a potential long ad off of that for a swing trade up back into the 430s, potentially even 440, because this would be an inverse head and shoulder at the bottom of a correction in that case. So at the moment, we do need to hold around this range. That's the critical thing. Again, trading is all about probability. It's not guaranteed we're going to bounce from around here, but this is a nice setup, a good pattern that has consistent results over time when it's formed, kind of like what I just showed you back in 2021. So this is on my sights for this week. But going into this week as well, again, like I said, there's going to be a lot of volatility. The VIX did close last week back below not only my pivot at 1760 here, but also my trend line, the yellow trend line right here that's rejected volatility in the past. We did go above it as of last week for the cup and handle breakout. We did close back below. So as of last week's weekly candle, this did invalidate the upward trend. However, it's very likely we're going to see a gap up in volatility, probably above 18. So as long as we remain above roughly 18 for this week, volatility will stay heightened. There's potential for pops back to around 20. Otherwise, if we can get back below this 1760 to 20 range, then we're going to see volatility stay subdued, and we're going to see it continue to get suppressed, kind of like what we saw before. So the goal, at least if you're bullish and want to see a bottom around here, the goal would be to see volatility get back below 1760, kind of like what we closed Friday at. And again, the only reason why we're likely to see a gap up on Monday is because of all the events that took place this weekend. So just a general understanding of volatility for this week. And also something else very crucial we need to talk about is SPY's dark pool prints that we saw not only last week, but the previous week. I mentioned the ones in the 425s as being crucial. We closed the weekly above these 425 prints. So 2.9 billion, 2.4 billion, 2.6 billion, etc., all around the high 425s. And not only did we see quite a bit from that previous week here up in the high 425s, but we also saw last week near the end a 2.8 billion print and a 2.2 billion print, both near each other in the 424s. This is a lot of premium in a very tight range. 424 mid to 425 high is a key pivot range. If we can remain above this range, especially going into around Tuesday and Wednesday of this week, that's actually bullish, and we can continue to see bullish momentum persist and have a continuation actually of what we saw on Friday. So if we do, I'm assuming based on futures, we do get a dip back to around this shoulder line for the inverse head and shoulders. If this area can hold, not only does it coincide with the inverse head and shoulders like I just shared with you, also is a convergence of those dark pool prints. Look at this on the right for the price over here. 424 mid to 425 high is right smack in the middle of this right shoulder. If this range can hold, even if we wick below in the daily, you're looking at a lot more upside afterwards. So this is the main battle zone basically between bulls and bears. Again, like I said earlier, trading is all about probability. I will take a long based off of this criteria this week. And if we were to go below roughly 422 mid, wick below and had confirmation below roughly 422 mid, then I would cut my position for the loss in that case. But we're looking at about $2, roughly $2.5 risk on SPY for a lot of potential reward if it does in fact come to fruition that we have an inverse head and shoulders pattern, because again, the target would be around those 430s. So I really like this risk reward. Again, it's not guaranteed, just like everything in the market. But like I was saying in the previous video, I do believe we are either at the bottom of this correction or we're near a bottom. If price were to fall below this shoulder line and we had a new low, I would only see roughly 415, like I was saying earlier, as being the actual low of this correction. Again, we are very close in terms of time. Bearish seasonality ends at the end of this week. So this would be the last week for bears to actually get things going to make that lower low to the downside. Otherwise, I believe we are setting up for an end of year rally. And it seems like, just based on looking at dark pools, again, this is just one variable along with many. Seems like there is a lot of institutional interest in loading shares, like you can see here in the 424s, like we saw up here in the 425s. It seems like there's a lot of institutional interest in loading shares for a lot more upside later on in the year. That's my personal opinion on this. Of course, with dark pools, you never know the exact intent of the orders, but based on experience with these, this is a very similar setup to what we saw in March, when we were looking at a couple very large dark pool prints around March 13th, which ended up being the exact low that we made over here, and also was a convergence of the previous downward trend line, if you remember that one from the January 4th high, and this started a major rally afterwards. So we're seeing a lot of similarities down here, a lot of dark pool prints as well to support that thesis. Regardless if we do get this inverse head and shoulders pattern or not, it seems like we are getting near to that low. So personally, I've been using this as an opportunity to load for what I believe will be an end of year rally. Regardless, one last thing I do want to share is my chart for QQQ. We unfortunately did not see a capitulation event like I wanted to see here, which would basically mean a large wick, a lot of longs. We get flushed out during that day, large wick under this trend line as well as this demand zone. We didn't see that at all. I personally would have liked to see that for a better bottom to be established. So there's still time for bears to do that, but we really are getting near the end of this bearish seasonality window. So we would have to see an invalidation basically of this candle from Friday, which would be very hard to do. Not impossible, especially with the headlines we saw this weekend, but 353 to 354 is the range to watch. As long as we remain above here, it is bullish, specifically above 360. As long as price can remain above 360, we have our sights set on around 372 being the upside of that. And I would not be surprised to see a short-term retracement from 372 and then a pop back above for continuation upwards. So I expect this up move to be powerful when it starts. Now, of course, there is the potential of invalidation of this candle. We'll know by Wednesday if it is indeed ready to invalidate that candle from Friday. Again, it's going to be very difficult for that to be the case, but nevertheless, as long as we remain above the bare minimum, this 353 to 354 level, we're looking at more upside, more bullish emphasis. Under here is when things start to get really interesting and we can see a lot more downside to like around 339. But again, we'll have an idea by Wednesday, and of course, we'll post a video on that day so you guys will be aware of what scenario lies ahead. Other than that though, as always, appreciate you guys watching this video, and I'll see you guys next time on Wednesday.